Welcome all. Very good morning. I would like to welcome you all on occasion of this new series. Last week we had series on construction and builder. So this week we have come with another series and where we will have eminent speaker. This series will be for 3 days, Friday, Saturday, and Sunday, and we will have three sessions with three specials experts in their own field, where we will have discussion on litigation matters. So today we have with us Avinash Poddar sir and Ajinkya Randive sir, who is MC member of Pune branch of ICI. So I would like to ask Ajinkya sir to give opening remarks.
Thank you, Ishwar. Good morning, everyone. On behalf of Pune branch of ICI, I welcome you all on the GST litigation series, which is starting from today. I welcome Dr. Avinash Poddar sir, and we all know sir is very eminent faculty in the litigation, and so we request you to now kindly share your thoughts on the litigation progress, and we start the seminar. Thank you, sir.
So thank you, Ajinkya sir. I would like to introduce our today's seminar speaker, Dr. Avinash Poddar sir. Today I am truly grateful that I have received this opportunity to introduce today's speaker. So Avinash Poddar sir is doctor. He is advocate. He is chartered accountant. He is insolvency professional. He has been into this industry from past 20 years, and he is currently practicing as an advocate from 2017. Before that, he was working as a CA, indirect tax and indirect taxation matters. He is regularly appearing and arguing before Honorable Supreme Court. And this short span, he have many favorable judgments in his name. So he is by qualification, he has completed his BCom, LLB, FCA, LLM, PhD in GST in research matter. He has also passed limited insolvency examination in IBBI, postgraduate certificates, and he have many other degrees. So he was in practice for last 20 years. Before 2017, he was working as direct and indirect tax consultant as a chartered accountant. From 2017, he is working as an advocate. So he have his expertise into appearing before Honorable Supreme Court, various courts, and I have matter for indirect taxation, appearing and arguing before session courts, appellates, settlement commission, authority of advance ruling. As a professional, he was specially invited for insolvency and bankruptcy code. He was also specially invited for GST and indirect taxation committee. He's been working with WRC from last 6 years. He is also member of GST and indirect tax committee of Gujarat Chamber. He has delivered more than 900 lecture, and today we have with him to deliver one lecture. He is also invited as a speaker in Summit 2018 organized by IIT Bombay. He has published and authorized many books. Some of them are like some books on GST, audit and annual return in GST, appeals in litigation in GST and custom, GST reference manual, glimpse of GST, step-by-step guide to GST. He has also helped WRC and ICI for some referral manuals regarding GST. Also, he has authorized some and published some books on service tax also. He has authored one motivational book titled Unleash Your Hidden Potentials, released in 2017. He has been recognized as TIOL Gold Award in 2020. He is also winner of Gujarat No Dikro Award by Page 3 magazine Gujarat. He is also prestigious recognition as a gem of CA profession by Ahmedabad branch of WRC. He is also delivering many lectures. He is member of GST Club India, and he also authorized some his articles on GST Tax Online India. So professional. He is also member of very we can say tax council, member of Bar Council, member of Gujarat High Court Council. He has, as a society contribution, he was president to Agarwal Professional Associate Gujarat. He is past convener of Anuradh Devar CP Study Circle. And he have lot of things to introduce, but I would like to wrap up this my introduction part, and I would why we are here. So we are here to listen Avinash sir. I would like to ask him to start his session. So everybody is eagerly waiting to enlighten our knowledge. So sir, over to you. Thank you.
Thank you so much, Ishwarji, for the wonderful introduction. I hope I'm audible.
Yes sir. Yes sir.
At the outset, I would like to thank Pune branch for giving me this opportunity of sharing my views on the allotted topic. Now, the topic which is allotted to me today is, first and foremost, this is a wonderful initiative by the Pune branch that now chartered accountants and the branches are joining together and they are trying to educate the members so far as the litigation is concerned. See, we as a chartered accountants are very good in compliances, are very good in understanding the tax laws. But somehow we were not getting inclined towards the indirect tax litigations. We always were there in the direct tax litigations. But now, after the introduction of GST, we all are aware that every chartered accountant is practicing in GST also. And therefore, looking to the future and looking to the expected outcome of the future, GST will bring a lot of litigations because this is a new law. It will take time to get settled. Until the time it gets settled, I'm sure that the issues will creep up and a lot of litigations will be there. So initiation of such a series is a wonderful initiative, I would say. And I am asked to deliver today or deliberate on the issues pertaining to the departmental audits, the investigations, and the summons. Now, friends, I'm not having any presentation with me. The reason is twofold. One, I prefer to speak extempore, and I prefer to try and resolve the queries of the participants in spite of having a monologue. I would prefer to have a dialogue. So, therefore, in the allotted time, I would prefer that some time should be allotted to all the participants so that if any queries they have, I can address them and I can try to learn from the queries. Number one. Number two, I am slightly occupied with some of the medical emergencies, my family. So because of that, also I could not devote time on this, and unfortunately, the presentation or the material could not be prepared. So I'm extremely sorry for the same. But nevertheless, we have time of 1.5 hours, around 80-85 minutes. I'll try to deliberate on the allotted topic with some practical discussions that I would be deliberating on the basis of my experience of litigation. And at the same time, we'll have some time for question and answers. Now, friends, the topic given is bifurcated by the organizers in 4 format. They have said, I need to speak on the legal framework. I need to speak on the preparation and the approach towards the departmental audits, investigations, and summons, the key areas of verification are in the audit, and last but not the least, the common issues faced by the taxpayers and its resolutions. Now, please appreciate, friends, that we are trying to discuss on the departmental audit. This is not the audit which is going to be an audit done by a chartered accountant. This is an audit which is going to be done by the department, and therefore, let us have a brief background of this departmental audit provision. We all are aware that in the erstwhile regime, in service tax and excise, the department were conducting GST, service tax or in excise audits, but there were a lot of litigations pertaining to the same, that whether these audits can be done by the department or not. There are in number of judgments, mega caps, Travelite, all these have traveled to the Honorable Supreme Court and are pending there. But Honorable courts, specifically Delhi High Court and Allahabad High Court, have let down that, have held that the audits cannot be conducted by the departmental officers because there is no statutory provision in the law. So, rectifying this mistake, they have incorporated a provision, a specific provision in the GST Act by way of Section 65 of the law. Section 65, they have empowered the authorities now in the statute, and therefore they have given the statutory uh, responsibility also to the government authorities, to the officers to conduct the audit. And audit per se is defined also in Section 2, Clause 13 of the CGST Act. Friends, the way and the manner in which the audit term is defined seems to be quite elaborative and quite broad. They can go to any extent for the purpose of verification and examination so far as the correctness of the books of accounts is concerned, correctness of the ITC which is availed and utilized is concerned, correctness of the input tax credit refund or the accumulated tax credit refund is concerned, ITC refund is concerned. So, sum and substance of what I am trying to discuss is a GST audit which was being done by chartered accountant and cost accountants under Section 35, subsection 5, which has been done away with recently by way of an amendment in the law, has nothing to do with today's discussion. So therefore, please keep that aside. So what we'll discuss and deliberate today would be the audit done by departmental authorities and some of the practical issues I will try to touch upon. So now let us come to the legal framework. As I've already specified, Section 65 of the Act deals with the departmental authorities audit, means the audit which can be conducted by the departmental officers. What they will do is, as per the procedure we all might be aware, so I'm not going to deal into those very basic aspects which we all are aware of, but still for the sake of brevity and for the sake of getting into the momentum, I will certainly touch upon that. So technically, what is the process? The process is that they will issue a notice to us or a letter to us saying that your case has been selected for the purpose of audit under Section 65. And these are the documents, kindly submit these documents within this stipulated time limit. Now, your role would be to submit those documents, whatever has been asked for in the, whether it is a letter or a notice or whatsoever, but it is in the specified form. So our endeavor would be to submit all those documents asked for. That is something known as profiling. So that will be a profile which will be collected by them from the taxpayer, and on the basis of that profile, they will do a desk review, and that desk review will be done in a way that they will identify whether this person is required to be audited or not. Now, this is something which is very important, and I would say that we all should be thorough into this or very clear about this. So they will, on the basis of the documents that has been submitted by you, they will try to ascertain whether this is a case which is fit for the detailed audit or not. In case they find that yes, the audit has to be done, or this is a case where the audit is required to be done, they will simply send a notice to you or send a letter to you asking that this will be the date on which the audit needs to be started, and the audit can be done either at their place, that is on the department itself. They will ask you to come with the documents and everything, and then they will start doing audit, or they will say that we will visit your premises for the purpose of auditing. Generally, they try to visit, or they prefer to visit at the place of the department, at the place of the assessee, and do the departmental audits. Now, So far as legal framework is concerned, section 65 of the law empowers them to do all this process and to conduct the audit. So therefore there is no specific aspect that to be dealt with, but yes, what would be our approach, how to prepare for that, that certainly I'll deal with. But let me go to the next legal framework of the next subject, which is investigation. Now friends, I am asked to deal with audit, investigation and summons. Now second comes investigation. When we see investigation, does it include search or seizure? I am requesting the participants to, if it is possible, to kindly they can participate. If they can participate, I would be happy to, very happy. So in the chat box you can write. My question is, investigation, does it include the search also? If anybody can help me in answering this, just yes or no. Does it include search also? Yes, Girish ji has said yes. Gopal Malpani is saying yes. Just please fast. No. Yes. Yes. Just 2 3 more answers, then I'll try to share my view. Okay. Kumar Gaurav, no. Rahul Saravgi, no. Okay, fine. Fine. Thank you. Majority of the persons are saying yes, but yes, there are some professionals, some brothers who are saying no. Nevertheless, my view is, let us go to the chapter which is provided in the GST law. It says inspection, search and seizure. It nowhere says investigations. So can we presume that investigation is a term which is derived out of inspection, search and seizure? See, what is investigation? Investigation is to determine, or a process or an act, or I can say a step to determine the tax liability, or to determine whether there is any leakage in revenue or there is any evasion of tax. All these aspects are precisely to be covered under this. So when I say that inspection, search and seizure are done for the purpose of locating the leakage of revenue or determining the situation whether there is any evasion of tax or not, can we not say that this is nothing but an investigation? To my limited understanding, I am holding a view that investigation includes inspection, search and seizure, and therefore we need to be aware about section 67 of the CGST law. Now section 67 of the CGST law deals with inspection, search and seizure. Now when I say inspection, search and seizure, please be with me and try to understand the provision of the law. I'm not here to read the provision and to explain the content, but yes, to give the legal framework. So there is a bifurcation of two things. One is inspection, only inspection in the law, and second is search and seizure. So therefore, where my limited understanding says that when there is an inspection, there cannot be a seizure, but when there is a search, there can be a seizure. Now this is something wherein we need to have a clarity of understanding when a professional assignment comes. So section 67 subsection 1, it says that any authority, I'm not reading the content of the law, I'm trying to just deliberate on the context. Any authority, after taking the approval of an officer, not below the rank of Joint Commissioner, having reason to believe that in this case there can be some leakage of revenue. He must have that reason to believe. So important is having the reason to believe. So if he is of the belief that the taxable person has suppressed some income or some tax or some taxable value, then in that case he can take the approval of an officer not less than the rank of Joint Commissioner, and he can certainly proceed for the inspection. Now, please bear in mind this says only inspection, and inspection means the inspection of books of account, the inspection of the entire document, the inspection of the place, whatsoever. But inspection has been segregated to an extent from the activity of search. So therefore, all the provisions of the Code of Criminal Procedure, which is equated to search, or the Code of Civil Procedure, will not be applicable to a larger extent in case of inspections. So inspection is what I can say is having a smaller horizon in comparison to search. Now this can be, the inspection can further be elevated to search. So section 67 subsection 2 becomes very, very important. Section 67 subsection 2 says that when in pursuance of the inspection carried on by the authority, number one, when in pursuance of the inspection carried on by the authority, or when it is found that there are certain goods liable for confiscation, books or things which are secreted at some place for the purpose of evasion of tax, then in that case the inspection can be converted into search, or directly the search can be ordered. So this has to be understood very clearly. First step is inspection, 67(1). So you will find the authorizations by Joint Commissioner or a superior authority to the Joint Commissioner saying that you are allowed to inspect under section 67(1), or they can say that you are allowed under section 67(2). So as a professional, we must see the search warrant or the inspection warrant. I think it is INS 01, form INS 01. So we need to visit that, and we need to visit that by a manner in which we need to examine under which section, under which subsection they are approaching us. It is section 67(1) or 67(2). Because recently I have argued one of the matters in Honorable Gujarat High Court, wherein they have inspected me under section 67 subsection 1, but they have seized my assets, books, goods. They have done all these actions by invoking a power under section 67(1). The question raised before the Honorable Court was whether it is a valid action. Prima facie, the court was also of the view that it is not a valid action because section 67 subsection 1 does not empower the seizure. The seizure is empowered only under section 67 subsection 2 action, which is a search, and search can be initiated in two situations. One, where it is in pursuant of the action under section 67(1), that an inspection was carried on, then it was found that this inspection is not going to help us, and therefore this action needs to be elevated, this action needs to be converted into the action of section 67 subsection 2, that means the search. This is one. Second way in which the search can be initiated is where the officer has a reason to believe that there are certain goods which are liable for confiscation, there are certain goods, there are certain books or things which are secreted at some place, and locating such books or goods or things is so important, because that will help the revenue to get the revenue or get the tax collection. So that is search. And when a search action is initiated under section 67(2), only in that situation the seizure is allowed. Otherwise, the seizure is not allowed. And my limited understanding says that 67(1) will not empower the authority to seize any books, any goods, or anything. That cannot be done. Now we'll address some more questions whether the catch can be seized or not. But give me some time. Let me just try and discuss the legal framework first. And now comes, so this was all about the investigation. My understanding says inspection, search and seizure are part and parcel of investigation process. Investigation process can be anything. Even departmental audit is an investigation process. Even what I can say, the sending of summon and determining your tax liability, the scrutiny, everything is an investigation. When it is in process, when it is in the steps of determining the tax liability or identifying whether there is any leakage of revenue or not, each step, as per my limited understanding, would be an step of investigation towards determining the actual tax liability. But yes, therefore I am saying that inspection, search and seizure is a part of investigation. And next is summons, which is given to me. Summons or a notice. See, please appreciate section 70 of the law. It's a broad section which empowers the authority to issue a summon to anyone and everyone. I am repeating, to issue a summon to anyone and everyone, because the law reads in this fashion. It says that the proper officer under this act, he has a power to issue summon to any person whose attendance he considers necessary, either to give evidence or to produce a document or any other thing in the inquiry in the same manner. So therefore, one confusion which we chartered accountants or we advocates are having after reading this is, can a summon be issued to a person who has nothing to do with the case? The answer is absolutely no. Can a person sitting at Pune, having the jurisdiction of Pune, send a summon to a person who is located in Gujarat? The answer may be yes, because the law nowhere provides any embargo or any restriction with regards to the jurisdiction for issuance of summon. Now, this is something which is very important. I'm trying to discuss. This is my understanding. Maybe I'm wrong, but this is how I read the law. So far as the issuing of summon is concerned, it says proper officer. Proper officer means the officer who is authorized by the commissioner or the commissioner himself. Now, commissioner authorizes a person to investigate a case, let's say of Mr. Avinash Poddar, who is residing at Pune. Now, Avinash Poddar has purchased certain goods from Mr. X, who is residing at Gujarat. Now, there is some doubt in the mind of the officer that whether these goods have been really supplied or not, or is it a entry only. So, therefore, what he can do is he can issue a summon to the Gujarat person and ask him to appear before him. Now, we can very well raise that there is no jurisdiction. This issue can certainly be raised even to the courts also. This has traveled. But in the law, there does not seems to be any embargo. Now, if we read this to a limited extent of CGST and SGST, and we say that if he is an officer of SGST of Pune, he do not have any jurisdiction to issue any notice to or any summon to anyone located in Gujarat, I can very well understand that argument. Even for CGST, because now CGST Act also for every state, it's a separate, the credit cannot be transferred, all those restrictions are there. And buying or an analogy can be drawn from that. And we can very well argue that yes, the person was not having jurisdiction. But I do not find any such embargo in this law. let us first, if you have the act, then you can certainly see the act itself, or let me read the definition of proper officer. Just a minute. Proper officer, clause 91 of section 2 says, in relation to any function to be performed under this act, means the commissioner or the officer of the central tax who is assigned that function by the commissioner in the board. So any function which is assigned by the commissioner in the board, or the commissioner himself, or the person who is authorized by the commissioner, can be said to be a proper officer. It do not provide any embargo. See, if we are arguing that a credit of Maharashtra, if that company gets merged with, let's say, Gujarat company, and there is a provision of section 18 subsection 3 which says that in case of any merger, any amalgamation, the credit which is there with the company which is getting transferred, that credit should also get transferred by virtue of section 18 subsection 3, irrespective of the fact whether that credit pertains to Pune or whether that contains that is for Gujarat. But law, or rather GSTN, does not allow us to take that credit because it says Pune is Maharashtra and Gujarat. So now the company of Maharashtra is merging with Gujarat. The credit should not or cannot be transferred. So I am arguing one of the matters in Bombay High Court. I am saying that there is no embargo in the law. So if I borrow that analogy, then the same analogy should also apply to the summons. This is my understanding. But yes, prima facie, the understanding of all the participants and all the professionals is that a summon has to be issued within jurisdiction. That means the jurisdiction of that officer who is issuing the summon, only to that extent the summons can be issued. Otherwise, the report can be passed on, or the information can be passed on to the jurisdictional authority of that person. Let's say in my case, in my example, Gujarat, and then the Gujarat authority can take action, issue a summon on the basis of that information, and that inspection can be, or investigation can be done by that authority of jurisdiction, and he can submit the reply or report to the Pune authority. So sum and substance of my discussion is that we can also understand in this fashion, although I am of a clear view that there is no embargo, but still, for the sake of clarity, because I don't want to confuse you all and don't want to drag into litigation, so therefore the common understanding is that he will pass on an information, the Pune authority will pass on an information of Avinash that this is to be investigated of Mr. X. Please summon him and investigate or inquire this. And then my jurisdiction, the jurisdictional authority of Mr. X, he will send the summon, he will inquire into the matter and send the report to the Pune authority. This is what is also happening in the department, and therefore this is the right way of doing it. So legal embargo is not there so far as the issuance of summon is concerned. It is not only the rights given to the DGGI, but it is also with all the authorities. But yes, certainly yes. If I have to argue from your aspect, then certainly I will say a Pune authority cannot issue a summon to a Gujarat person. So this was all about summons. So therefore, three topics: departmental audits, investigation, and summons. The legal framework is certainly there, so there is no dispute. These actions can certainly be taken under section 65, departmental audits. Under section 67, the inspections, search and seizure, that is investigation, and the summons can also be issued to any person whose attendance is considered to be necessary for providing any evidence or to produce any document or to record a statement. So that also can be done by the authorities. So legal framework, we are clear that yes, the law provides for all these actions. Now comes the second aspect, second limb to be discussed. It says what should be the approach and how should we prepare for it. Arshadji, I think there is a hand raised, but I'll request all the participants to give me some time. Let me deliberate, and once we are done, we'll take up the queries. I have devoted 30 minutes for that because I prefer to have a dialogue with all the participants to learn with them. It is not only going to be a monologue. So please allow me to complete my aspect, and then we'll have the queries. there are certain queries which I can see. Manish Kumar has also raised one query. I'll answer those queries. Now, what should be the way in which we should prepare or the approach? See, first I'll deal with approach. Please appreciate we should have only one approach, that is the compliance to all the summons, all the notices, whatever we receive, whether it is pertaining to departmental audits, whether it is pertaining to inspection, search and seizure or investigations, or whether it is pertaining to the summons. We should not avoid, we should not avoid any such notice or letter issued to us. Any compliance has to be done. So let us take one by one. Let us presume that you have received a letter saying that your case is selected for the purpose of departmental audit under section 65. These are the documents to be submitted by this date. There can be a situation wherein you may not be in a position to submit. There can be a situation wherein you are not inclined to submit. There may be a situation where you are ready to submit. In all these three aspects, the role of a chartered accountant, the role of a professional is totally different. I'm inclined to submit, but if I'm not ready to or ready with the material, or if I'm not at all inclined to submit in any situation which I have discussed, your response certainly has to be there. Now, response can be in any ways, like if you are not inclined, then you can ask for more time. You can say, these are the issues. If you are inclined, then certainly you can ask for a lesser time or submit some of the documents, and because there are some documents which are very general in nature, so those documents or the information can certainly be submitted, but there are some documents which you would wish not to submit. You can avoid submitting those. It is not mandatory. The important is to respond back to all those notices which you are receiving for the purpose of audit, investigation, or the summon. Non-responsive or non-responsiveness, as per me, is a crime that should not be uh, encouraged by we professionals, we chartered accountants. Every summon, every notice needs to be responded back. Now it depends on facts and circumstances of the cases. You may not wish to give a clear-cut answer. You can have that reservation with you. You can certainly hold it back, but replying it is of utmost importance. So therefore, the only thing which I would like to say, so far as preparation is concerned, if it is a case of audit, because if it is a case of investigation, the time of preparation will not be or may not be given to you, because they will come all of a sudden. But if it is a case of audit, or if it is a case of summon, then the way in which you can prepare is, I would impress upon the provisions of section 35 read with rules. You should be very thorough, and all your registers and documents which are mandatorily to be required in the law to be maintained, you have to maintain all those documents. You need to make sure that all those documents which are mandatorily required under section 35 of the CGST Act are properly maintained. All the documents those are supposed to be there are there. All the returns those were supposed to be filed are filed properly. And in case there is any escapement, not deliberate or not intentional but unintentional, then those also are determined in advance by you, and if possible the tax is also paid voluntarily by you with interest. So once you are prepared with all those things, I'm once again repeating for the sake of clarity to all the participants, that all those documents, records, registers which are supposed to be maintained by virtue of section 35 read with rules must be maintained prior to the departmental officer coming into your premises for the purpose of audit. Over and above that, you must engage yourself in pre-audit. That means the audit prior to the department conducts that audit, and try to determine whether there is any mistake intentionally or unintentionally committed, whether there is any leakage of revenue or any short payment or non-payment. If you find that yes, there are some short payment or this thing non-payment at your end, then certainly what you can do is you can move ahead, you can go ahead and make the payment of taxes along with interest. This will not only establish your bona fide, but also save you from the penalty under section 74 of the CGST Act, or the imposition or the invocation of section 74 of the Act. So therefore, this is the only thing that I would like to recommend for the purpose of preparation. Now, when I say that what needs to be prepared for, it is certainly documents, registers, and the records which is supposed to be there. But when I say which will be the keys, what will be the key area of verification of the officer, so it depends. Generally, they will focus on their giving, what they are giving to you. They are giving you ITC, because whatever you are showing as your outward liability is going to be received by you. So they will not focus on that. Certainly they will look into, because whether there is a less recording of sale from your end or not, they will try to verify it. They will try to cross verify, because now it is a digital world. So by a click of a button, we can get to know that Avinash has this GST number. On this GST number, what credit has been taken by the recipients of Avinash. So if the recipients of Avinash has taken a credit, let's say of worth turnover of 10 crores, whereas the Avinash is showing only 8 crores in his outward tax liability, that will certainly be a trigger point for the officer. But over and above that, what I understand they will be focusing would be on ITC. They would be focusing on your compliances, because generally we are lethargic in the compliance. We tend to avoid, we tend to file at the last moment, we tend to wait till the last moment, and whenever something is done in haste or at the last moment, there are likelihood of some errors or some mistake. So therefore, the point which I'm trying to drive on is that they will focus on your ITC, number one, on your outward supply, number two, on your compliances, number three, and the records, books, and the documents which are statutorily required to be maintained. These are the four aspects I believe they will look into while conducting the audit. And why they will do this? Because first two, that is ITC and the outward supplies, these two will help them to derive a situation of earning a revenue for the department. Because if you have claimed some ITC which was not allowed to be claimed, or which is disputed, which is sub judice, just as section 17(5)(d) safari retreat is sub judice. We are also arguing in Gujarat High Court. There are many matters which are pending before the Delhi High Court. So those matters are sub judice. If you are availing those credits, the department can certainly raise a voice, because it is not state, or an order is not in your favor. So therefore, they can certainly say, no, whenever the decision of the Supreme Court will come, you can claim refund, but for the timing, you will have to pay this. It has happened in the Ocean Freight yesterday. I'm happy to share that I was part of that one batch, and we got a very good, wonderful order from the Honorable Supreme Court, where the Honorable Supreme Court has also upheld the decision of the Honorable Gujarat High Court in Mohit Minerals, saying that the Ocean Freight, the GST on Ocean Freight cannot be levied. So that is a wonderful judgment which is given. So now it is a settled law. But till this time, Any audit which was being conducted by the authorities, they were disputing it. They were saying, oh, ocean freight, no, 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 you will have to pay. You will have to pay. You pay under protest or whatsoever. But once the Supreme Court adjudicates, then we'll refund you the amount. There is no dispute per se. But till that time, till it is sub judice, you will have to make the payment. So this was their argument. And this is what they are going to do in case of audits. So they will approach you, they will try to do ITC verifications, then they will do the outward supplies. And one most important aspect, they will also be inclined to check the RCM applicability and the payment thereof, because RCM is required to be paid. RCM is required to be paid out of electronic cash ledger. It cannot be paid out of electronic credit ledger. And therefore, this becomes very, very relevant and important. And they generally, during the audits, verify this, that when you have paid RCM, whether it has been paid in electronic cash ledger or not, and when you have claimed the ITC of RCM, whether it was allowed to be claimed or not. So ITC is one. Second is your outward supplies. So what I would suggest is that you should be prepared with a reconciliation of outward supplies, because most of the times it happens that or many of us have done that mistake, that we have shown outward supplies. In case of purchase return also, that has been showed as an outward supply. In case of sales return, it is reduced from somewhere else, not from sales, but it has been added to the purchases. So those records needs to be verified by you once again, and the departmental authorities will certainly focus on your outward supplies, more specifically the outward supplies if there is any mistake of sales returns or purchase returns. So that needs to be reconciled. You should be prepared with the reconciliation before the authority visits you, that yes, this is the outward supply as per my financial books of accounts, and this is as per 3B, and the reason of difference is this. So that is the second thing which they will be focusing upon. Third thing that they are likely to focus would be the records which you are subjected to maintain, because section 35 is very vocal, rules are very vocal. They say these are the records to be maintained. Please appreciate, friends, if an ITC register has to be maintained, it has to be maintained. If an outward supply register is to be maintained, it should be maintained. You cannot afford not to maintain that. Now, there can be an obvious question from your aspect, that if there is no evasion of tax, and if you are not maintaining the ITC register, what will happen? At the most, they can levy a penalty of 10,000 rupees. The answer from my aspect would be yes, to a large extent, yes. But I also believe that they, as an authority of law, can certainly say that since you are not maintaining the books of accounts properly, it is not being accepted. Your records are not being accepted, and therefore they can levy a higher penalty on you, not only from the perspective of section 122, 125, but they can also go beyond that, and they can say that you have not complied with the law thoroughly. This indirectly can be said that they can reject your books of accounts. They can say that we do not follow these books of account because the statutory register which was supposed to be maintained has not been maintained. But certainly nothing to be afraid about. These are only things that they can like allege you for. But certainly in the eyes of law, there is no penal provisions pertaining to this except 122 and 125. So don't be afraid about it. But yes, my recommendation would be that all the records documents which are supposed to be maintained under section 35 of the law must be maintained prior to the departmental audit being initiated. All these things, all these preparations that we are discussing for is only from the perspective of the departmental audits, because I very clearly understand that for inspection, certain Caesar, we will not be given any time for preparation of this. And last would be the compliances, because there is also a leakage of revenue. They will focus on getting the penalties, late fees, etc. from your compliances. If something is said to be complied with, let's say section 143, you are sending something for job work, or the job work is a regular feature, and you are not filing that ITC 04 because of any reason, then in that case there is a non-compliance at your end, and non-compliance of that will lead to some late fees or penalties or something like that. So they will also focus on non-compliances. So these are the four aspects which you should be prepared for in advance before the department comes for the audit or initiates the audit. And you should be very clear if there is any negligence, or if there is any non-payment or short payment or erroneous refund which has been claimed, or the ITC which is claimed which was not otherwise not allowable. So if you determine that in advance, I would recommend that you should pay before the authority reaches at your place, and that would lead to a bona fide action which will help you to avoid the penalty complete. Now, another aspect which is also asked in the mandate given to me is I should discuss on the common issues faced by the taxpayers and what are its resolutions. I'm only to the department, to the extent of department audit now. Now, one of the most common issue which I have seen during the course of my journey in this, one is 180 days payment. Second proviso to section 16 subsection 2, which says that failure to make the payment with total amount, that is the amount of goods as well as the tax, needs the reversal of ITC which has been claimed along with interest. So if you fail to make the payment in 180 days, then this second proviso to section 16.2 gets triggered. And most of us have failed to maintain a proper record of this. And there are delays also in many of the cases. So department is raising this issue, and they are asking us to reverse not only the credit but also to pay interest on the same. So what can be the resolution? See, now there are two ways of handling any situation as per my limited understanding. One is that you try to solve it amicably within the purview of law, and two is to resolve it or try to resolve it aggressively going into litigation. So first approach should be that you should have the clear cut calculations of when it was paid, how many days delay is there, and also in your case whether the ITC which was claimed has been utilized or not. Because as we all are aware, section 50 subsection 3 in this amendment budget, in this budget it has been amended, and now they are saying that if you have claimed an ITC which was never utilized, interest will not be applicable. So first you should see whether you have utilized the credit which was wrongly availed, or for which the payment has not been made in 180 days. If you have not utilized, there is no question of any interest. But yes, if you have utilized, then certainly the question of interest will be there. Now comes the compliance part. See, the law says, the rule 37 says that if you are unable to make the payment within 180 days, then you need to add that into your output liability and make the payment of tax accordingly in form GSTR 2. Now, in absence of form GSTR 2, I don't find any way, I don't see any circular, I don't see any advisory which the government has issued for this particular issue of 180 days, wherein they have said that in absence of GSTR 2, this can be done by way of filing the information in so and so column of GSTR 3B or any other form. That has not been done, or in GSTR 1. They have not done this. So therefore, we can very well make a submission to the department that in absence, we are ready to comply with this. We are not running away with this. But in absence of GSTR 2, we are unable to comply with the law. So therefore, the principle which can be derived out of this is that when a law is made, a machinery provision and the procedure has been laid down. A specific procedure is there, but the machinery to comply with that procedure is not provided. The taxpayer or the citizen cannot be held liable for non-compliance of a provision for which the machinery provisions are not given. I hope I am very clear. So that can be the second line of argument, wherein we can say that since GSR 2 is not effective till date, we are unable to comply with this. And in absence of any advisory where it has to be shown, how it has to be shown, in which form it has to be shown, we have not complied. There was no milla fide. It is only because of the non-effectiveness of the respective form or no explanation or no information given to us that this non-compliance has happened. That will certainly help us. Third is the Indian Contract Act. See, I have entered into a contract with Mr. Ajinkya that I will supply certain goods to you and you can make the payment after 1 year or after 5 years or after 10 years or after 2 years or within 20 days. This is a contract between the supplier and the recipient, between Avinash and Mr. Ajinkya, wherein the terms of contract says that you can make the payment in so and so days, which can be 1 year, which can be 2 years, which can be 5 years. So that is a contract. Now the law says this contract should be rewritten. It should be rewritten in a way that now, even though the Avinash is saying that the payment has to be made in 2 years, still Mr. Ajinkya, so as to avail the input tax credit or become eligible for input tax credit, will have to make the payment within 180 days. That becomes a legal argument wherein we can very well say that a contract cannot be rewritten in such a fashion. You cannot compel me to make the payments within 180 days because the law, if we read cautiously, it says failure to make payment of tax. It is not a failure to make payment of tax in 180 days. If the contract per se says that you can make the payment in 2 years, where is the question of any failure? So it is not a failure. So therefore, these can be the three ways. There can be multiple ways also, but because of the paucity of time, I will not be discussing all those things because I want to spend more time with the participants and asking their answering their queries. But this is what I understand, that in this fashion this can be handled. So this is one of the common issues which I've seen during the audit. The another common audit would be common issue can be Rule 36 sub Rule 4 non-compliance, because majority of us could not comply with. Rather, that is a rule which cannot be complied with. So Rule 36 sub Rule 4, now 16(2)AA, which says that if your supplier has not shown, then you cannot claim the credit, or you can claim the credit which can be whatever is shown plus 10%, 5% or 20% in the respective period. So that is Rule 36 sub Rule 4. Majority of us have not complied or have failed to comply with that. So department will raise those queries of difference in GSTR 2A and 3B and all those things. So that is one of the common issues. Now again, there can be two arguments, two submissions. One on the factual basis, that when you have claimed the credit, on what basis you have claimed the credit. Whether it was basis of invoice, receipt of goods and all those compliances of conditions of section 16(2). If yes, then you can very well argue that it is only because of the timing difference, that GSTR 2A was not showing of that particular period, but in respective time or in later time, it has been shown. So those credits are anyways eligible to you. It is only because of the timing difference or that you have claimed earlier and it was shown later or whatsoever. Or else there is another way of handling it, that is litigation. You can go aggressively. You can challenge 36 sub Rule 4, which is already under challenge before the various high court, but the courts are still not deciding, or they are reluctant to decide it. That 36 sub Rule 4 is beyond the authority of law. Law nowhere provides. Now, after introduction of this from 1st January 2021, 16 to capital 16 to double A, clause double A. Now they have inserted in the law, but prior to that, it is now automatically very clear that prior to that there was no provision in the law. So Rule 36 sub Rule 4 is ultra virus to the act, and therefore that can very well be argued by us in the aggressive way. So this can be the two ways of handling it. When the department comes for audit or inspection or investigation, and they raise the query of 36 sub Rule 4, you can very well reply to them, showing the facts of the case that this is what I have taken, this is when I have taken, and this is when has been shown by the supplier. So therefore, it is merely a timing difference. It is not the credit is not eligible, or I have availed some wrong credit. As per my books of accounts and as per my controls, I have claimed the credit on the basis of section 16 subsection 2 compliance, that I was having a receipt, I have received the goods, I was having an invoice, I have received the goods, I have made the payment to the supplier, and supplier also made the payment of tax. All those conditions are satisfied. Therefore, I am eligible to claim the credit. That is one way of answering it. And the other way of answering is it that you raise the audit para, you raise the objection, no problem. We'll go to the courts and challenge this. So that is the second way of looking at it. So therefore, the second issue, which I presume the most common issue, is the difference between the credit which is claimed by us and the difference which is there reflected in GST at 2A. That is Rule 36 sub Rule 4, or the mismatch or whatsoever. So that can be the another aspect or another issue. Third, when I pronounce this mismatch, so that is another common issue. Now, department says that the credit which is claimed by you and the credit which is being shown in your 2A or your records is not matching. Now, please appreciate that there is a provision in the law. Still, there is a provision because amendment has come, but till it is made effective, the old law will prevail. And section 42-43 deals with the mismatch. It says that whenever there is a mismatch, you need to add that in your output tax liability and pay the taxes accordingly. Now, for the mismatch, there is an entire procedure mentioned in the law. They says that it will be in 2A, then it will be given an opportunity to accept or reject it. Then if it still remains mismatched and there is no action taken by either the recipient or the supplier, then in that case, the liability has to be paid. Now, there is no such practical application of this. It has not been implemented. In the absence of such implementation, I am of the view that mismatch can never be ascertained. It can be only a gross reconciliation that you can do. Ki aapka 2A mein 2 crores is being shown, and in the GST 3B 2 crores 10 lakhs is being shown, so there is a difference. But if it has to be measured invoice wise, it is not possible. It is possible only on a larger extent. It is not extend to the minor test extent which the law provides for. So therefore, that issue can also be resolved depending on the facts and circumstances of the case. So this again I am founding to be a very common issue. Then another common issue which is being determined by way of issuance of investigation, summons, or departmental audits is the ITC. The department says, let me give an example. I'm arguing one of the matters in high courts wherein the raw material is used to produce, let's say, X goods. If I'm giving 100 units of input or a raw material is being used, there is an output of 20. That 80 which is remaining becomes a byproduct. Which can be which can be sold by me. I can certainly sell it, that byproduct, but there is no GST on it. I'm repeating the question because that is very interesting, and this will give a flavor to you or a clarity in the understanding. What is happening is I'm using 100 units as my raw material in the manufacturing process. Out of those 100 units, I'm getting 20 units as a taxable output, which is my main product, the main basic product. And the remaining 80 comes out as a byproduct or as a scrap or a waste, whatsoever you can say. But that is marketable, that is sellable in the law, sellable in the market. So I sell it, but there is no GST on it. Now department has come in audit, and now they are saying, boss, you have a turnover of 20 units on which you are discharging tax, of 80 units, which is byproduct, waste, whatsoever, on which you are not discharging tax. So therefore, you must reverse the ITC to the proportion of 80 by 100, because you have not used that raw material for making the taxable output supplies. Now, please appreciate, friends, there can be two lines of argument. There is a settled law. Even Supreme Court has said that if any exempted product is also being manufactured, then the ITC needs to be reversed proportionately. But whether that will apply in this case, the answer, as per my limited understanding, is no. The reason being, unless I use that 100 raw material in producing this 20 units, in producing this or manufacturing process, I will not be able to produce 20 units. Minimum 100 units are required for producing 20 units. So it's an industry standard. So unless I use 100 raw materials for production process, 20 will not be the output. So therefore for 20, 100 is a raw material, and therefore the ITC should be allowed. Forget about the turnover pertaining to balance 80 or the waste or raw material, because that is something which I am getting as an extra. Secondly, the important aspect is, I am selling in my example. What would happen if I am not selling it? I am just disposing it off free of cost. Then also you cannot say that the credit will not be allowed. So therefore, these are certain technical parameters which the department may raise while being or while visiting your place as for the purpose of audit or investigation or sending you a summons. So that is another issue, a very common issue which is being uh, countered by all of us during the course of audit, and the resolution of this can be very simple. The facts and circumstances of the cases and the way and the manner in which you want to present your case. That I have given an example which I am arguing, that 20 units cannot be produced without 100 units as an input. So can you say that for these 100 units are also used for producing those 80 exempted products? The answer is absolutely no. It is merely for the purpose of producing those 20 units. Now, after 20 units, if I'm remaining or I'm having some scrap, some waste, which can be used as a byproduct by some other agency or some other industry, which I'm selling it off, where is the question of reversal of input tax credit? There cannot be. But yes, can be some common credits, because see, it has to be 1:1. If a raw material is being used for the production process of 20 units, then that entire credit should be given. It's the principle of law, section 68 rule 42, section 42 rule 42. It's a principle of law, the credit should be given. But if it is a common credit, let's say audit expenses, then yes, the auto reversal, the proportionate reversal is to be there. So this has to be the angle from where we need to resolve these queries pertaining to the ITC. The second common query would be 17.5D. Let me give one another example. Now there was one client who is into the manufacturing, who is into the development of SEZ units, or maybe the plots or something like that, or a mall, which is certainly to be used for the purpose of renting it out. He is not having any intention to sell it. Now, if he is not having any intention to sell it, please appreciate, friends, when we read clause 5B of schedule 2, it clearly says any construction which is with the intention to sell. which is having the intention to sell. So in this case, I'm not having any intention to sell. Whether the credit should not be given to me. There is a judgment of Safari retreat wherein it has been read down. But even otherwise, it's a common principle, it is a settled principle of law. If I'm doing an output or if I'm generating an output which is taxable, then as per the principles of value added tax, the input which is being used for providing that output, the credit should be allowed. So these are certain questions which on the facts and circumstances of the case, you will have to determine at that point in time whether you are going for a non-aggressive route, that is you are trying to establish from the facts and circumstances of the cases your bona fide, or you are going from an aggressive route and try to establish your bona fide, and you can try to point out the question of the law which is engaged there, and seek the indulgence of the court. So this is how we can handle these common issues which as per me are very relevant. So ITC is very important. The differences of the credit which is being there in 2A, 3B, 36, 4 compliance, and all those things are the common issues which I am seeing in most of the cases. Then there is one another common issue of reversal of credits as per rule 40 to 43. Majority of us have not done that because that was to be done on a monthly basis, which we have not complied for. Even annually that was to be recalculated, that has not been complied for. So that is an area wherein we can work. So for being prepared for the department audit or any investigation in future, we need to have all these reconciliation in place. Why we have done this, or if the credit was wrongly taken, when we have reversed, how we have reversed, whether the proportionate reversal as per rule 42 is there or not. All those things needs to be reconciled. We should be prepared before getting this department audit initiated. I do appreciate in case of investigation that is not possible, but in case of summons also it is possible. Now I'll deal with next 15 minutes. We'll try to touch upon 2-3 another issues, and then I'll open up for the queries, because I can see that there are certain queries and I would love to answer that and have a dialogue. Now, another very important issue which is being faced by every one of us, and which is again pertaining to ITC. Nowadays, what department is doing is they are saying, Avinash, you have taken credit of supplies made by Mr. X. Now, please be with me. It's a very important and interesting thing that I'm sharing with all of you. And this is going to be faced by each one of us while handling this departmental audit or investigations or summons. Mr. Avinash, you have claimed credit for the supplies which is being made by Mr. X to you. Now, the registration of Mr. X has been cancelled by us. So therefore, we presume that you indulge yourself into the fake invoices, and therefore this credit should not be allowed to you. Or they will issue a show cause notice why we should not reverse this credit, or ask for the reversal of this credit or recovery of this credit which has been wrongly availed by you. I hope you all are understanding what I'm trying to say. This is the most common issue which is being faced by the taxpayers as on date. Now, please appreciate there can be various ways of handling this. Any credit being availed on the basis of an invoice cannot be said to be availed through fake invoices, because fake invoice is something which is not an invoice as per the law. I'm repeating, fake invoice is something which is not an invoice in law. There is no definition of fake invoice. Department has only drawn, or rather invented this word fake invoice. But what is fake invoice? There is no definition per se. Sir, my limited understanding says fake invoice is only an invoice which is not an existent invoice. Let's say an invoice issued by a person who was never registered. A wrong GST number mentioned, a wrong name is there, and a credit is being passed on. That is fake invoice. An invoice issued by a person in some other name, like I'm Avinash, I'm issuing us an invoice from the name of Mr. X, showing his number. Name is written Avinash and number is that of Mr. X. So, friend, that is something which is fake invoice. An invoice which is not an invoice in the eyes of law. But if it is if it is an invoice in the eyes of law, then as per my limited understanding, it can never be said to be a fake invoice. Never ever. It can never be said to be a fake invoice. Yes, the ITC may be wrongly availed because you might have not received the goods. It is only the movement of the invoices that is there, or the supply of the invoices but not goods. It is covered. Section 122, it specifically covers that where the movement of goods are not there, only invoices are there, or where there is supply but no invoice. All those things are already covered in 122. But my understanding is very clear, and I'm very, very clear on this, that fake invoice means an invoice which is not an invoice in the eyes of law, which is absolutely not covered under any provision of the law. That is something which is fake invoice. But if an invoice is issued properly under the provisions of law, then it cannot be said to be a fake invoice. But department, what they are doing is the common issue which all are facing is they will say that your supply is XYZ, their registrations are cancelled, and therefore your ITC needs to be reversed, because we are presuming that these are non-existent persons XYZ, and therefore the credit should not be given. Now please appreciate, friends, section 16(2)(c) is under challenge before the various high courts. Calcutta High Court has given in LGW one of the judgments where it is read down. Then DY Bithal is there of the Madras High Court Madurai bench. There are a number of judgments which protect us. But please appreciate, no need to go there. Be simple. See, please appreciate, if you are there in a position to establish from the records, from the books of accounts, that yes, the credit which I have availed for the supplies made by X, Y, or Z is properly recorded in my books of accounts. These are the entries which are proving the receipt of the goods. These are the entries on the basis of which I have claimed the credit. I have made the payment of tax. It is being reflected in my GST 2 capital A. That means the supplier has accepted that he has made a supply to me. Then where is the question of reversal of the credits? It is a valid credit, a bona fide credit, unless you establish that there was a connivance between me and my supplier XYZ. You cannot ask for the reversal of the credit, number one. Number two, so please appreciate, we have struggled a lot in last 2 years because of the COVID. Now there are various businesses, there are various places wherein the business has been closed, and it is expected, because if you are not having any business for 2 years, 1 year, or more than 6 months, every businessman cannot survive. So that can be also one of the reasons of the closure of the business or non-compliance of the returns by my suppliers, merely because his registration is cancelled. Cannot be, I'm repeating, merely because the registration of my supplier is cancelled either suo moto or from retrospective date or by on his own, that cannot be a reason for reversal of my ITC. The department will have to go beyond this allegation. They will have to prove that you connived with that person. There was no movement of goods. It was merely an invoice which was supplied. Then only you can be said that the credit was not eligible as per section 16 subsection 2. Otherwise, this allegation will not sustain in the eyes of the law. So therefore, again, I would say, as a student of law, in this forum, before this August participants and the gathering, very, very strongly that all these allegations of fake invoices will not sustain in the eyes of law unless they are able to prove that yes, they have connived. And even the statement of the supplier or any other person will not help them, help the department. Reason being, reason is very clear why they would not help, because I have the power of cross examination. Please note this. Whenever any such allegation is there, the department is trusting, the department is relying on any statement given against you. Please bear in mind, friends, you have the power to cross examine that person who has given a statement and the department is relying. Please cross examine them. So, therefore, this is the most common issue which is being faced by majority of us. I'm not saying few of us, majority of us in this GST times, because department has heard, and there are some number of fraudsters. I'm not saying there are not fraudsters. There are fraudsters. There are, but those numbers are so less. But because of that 0.1% taxpayers, because out of 100, I think 1 crore 30 lakhs is the registered taxpayers. Out of that, not more than 1 lakh taxpayers can be fraudsters. Maximum, I'm saying. So it is less than a percent, 1%. So because of those 1% or less than 1%, you cannot held responsible to the entire 100%. Rather, let me put in this fashion: my supplier has gone away or he has run away. Now he cannot be identified or he cannot be found by the officers, because he is not located or he is absconding. Now department cannot come to me and ask for his recoveries. DY Butler lays down the same principle. First, the department will have to try and recover from that person. If he fails and the connivance is proved, my bona fide is not there, mala fide is there, then in that case I become liable. Otherwise, I'm not liable. This is my humble submission, and this is what I'm striving for. And in most of the cases, we are fighting for this. So, friends, this was another common issue. So, let me try to sum up in next 5 minutes, and then we'll try to have the question and answers. What I've tried to deliberate is whether department audit is legal. The answer is yes, because Section 65 of the CGST Act empowers them. Second was investigations that include Section 67, which says inspection, search, and seizure. Now there is one another section also which you can take a note of. That is Section 71, which deals with the access to business premises. Now the officers are also empowered to have an access to the business premises, my business premises, for the purpose of examination of my software, computer, and the other necessary records. So that also comes into investigations. So as per my limited understanding, even departmental audit, even a scrutiny of returns, even any other summon, all those are part and parcel of investigations. But yes, to be precise, the inspection, search, and seizure are more of a investigation action, and therefore it is also having in the valid statutory provision in the eyes of law. And summon, Section 70, it can be issued to any person whose attendance is considered necessary for a particular matter. This is important. Meaning thereby, any summon which is issued to Mr. Avinash saying that I, Mr. X, so and so, hereby summons you to appear before me on so and so date, as per me, is a bad summon. But that does not mean that we will not comply with it. We need to respond back that this summon is vague. Someone must specify the matter in which you are conducting an inquiry, and why this summon is being issued to me, whether my attendance is required, whether some documents is required, whether an evidence is to be produced, what is to be done. So therefore, summon is valid. But you need to, as a chartered accountant, as a professional, we need to look into the content of the summon, because Section 70 clearly says that a summon can be issued by the proper officer to any person whose attendance is considered to be necessary so as to provide evidence or to provide document in an inquiry. So unless there is an inquiry, unless there is a matter which is pending before that proper officer, and he connects you with that matter, he will have to mention that in the summon that we are conducting an inquiry in the matter of XYZ Limited, and we hereby summon you to appear before us on so and so date in the inquiry pertaining to the aforesaid company. Then that summon is the valid summon, otherwise that summon is invalid summon. So we have tried to understand the legal framework. We have tried to understand the preparation. Preparation in the nutshell, I would say, just be prepared with all these documents which are specified to be maintained in the eyes of law. Section 35 of the law, Rule 56 and the other rules. Also try to have the reconciliations ready. If there is any short payment, then make those payments also before the department approaches. That should be how you should be prepared. The only thing the department can do, because looking to the content, looking to the definition of term audit, it is a broad power which is given, and it's a broad responsibility which is given to the authorities. So therefore we need to pay an attention to that very, very strongly, and be prepared with all those documents which are mandatorily required to be prepared by us. Along with them, you can have a cross check, prepare a reconciliation, and if there is any short payment found or any erroneous refund or wrongful availment or utilization of the credit, reverse that or pay the taxes accordingly. That should be how you should be prepared for the purpose of audit or inspection or summons. Then we have dealt with some of the common issues which is being faced by the taxpayers as of now. Most common issue is the ITC, the mismatches, Rule 36 sub Rule 4, 180 days payment. These are the common issues. Then comes the technical issues, which one example I have given, the reversal of credit, proportionate reversal as per section 17, wherein they are saying that if you are producing something, your turnover includes the exempted turnover and all those aspects. And then the another common issue which is for the time being there, which may not be in the future, but which is for the time being because of the fake invoices and those records and scams, that any supplies which is being made to you by a supplier whose registration is cancelled, the department is alleging that there was no actual supply being made, and it is merely a fake invoice that you have indulged into and you have availed a wrong credit. So that again, I've already tried and to distinguish, and I've tried to answer how to handle that or what should be your way. You can have and in all these replies, in all these aspects, you can have any of the ways. You can be a compliant person. Response can be in the soft manner, depending on the facts and circumstances of the case, or the response can be in aggressive way, pointing out the error in the law, pointing out the error in the act of the officer, and trying to litigate it to the highest level and getting the answer to the question of law which is being framed by you. So, friend, this was all from my side so far as this topic is concerned. Yes, I could have certainly dealt with some more contents also, but I would like to restrict myself because broadly I have covered whatever is to be done, whatever is to be taken care of for the purpose of handling these departmental audits, inspections, search and seizures, and the arrest. Because you should be very clear what can be done by an inspecting officer. He cannot seize. If he has seized, that is a wrong action taken by him. Then what can be done by a search team? Lastly, I will answer one question. I would like to answer one question, which is pertaining to can a cash be seized? Yes, there is a judgment of Madhya Pradesh High Court wherein they have said that the cash can be seized. But I still hold a different opinion, and as per me, the cash cannot be seized. The seizure of cash is not possible. So still there is a long way to go. I am arguing one of the matters before the Bombay High Court, and let's see what happens. In that, the cash was seized, and I'm arguing on the same front. Post vacations in June, it will be listed, and probably I'll get some favorable order wherein we can get the relief that the cash cannot be seized. So This is all from my side. Now I can be, or I'm rather very much excited to have a dialogue with all of you and to learn along with all of you by way of answering, seeing your queries and answering to them. Over to you, the managing committee. The queries, if any, we can take up with those queries.
Yes, sir. There are some queries in question and answer. So, should I read it for you?
Yes, yes, please
Is
go ahead.
that fine? Yeah. So, first query was by Manish sir. When will be the audit? When will the audit be considered to be started?
Acha, okay. This is a very good question because the commencement of audit is specifically dealt with. If I am not wrong, it is subsection 4 to section 65, and explanation is given, wherein they have said that it shall mean the date on which the records and the other documents which are called for by the tax authorities, the all the records and the documents which are called for by the tax authorities are made available to him by the registered person, or the actual date of initiation of audit. So therefore, if he is asking me for certain document, let's say I have complied with, I have submitted documents 90%, but 10% are remaining, or 1% is remaining, he is asking for that. Since last 1 year, the first notice was issued 1 year ago. I have supplied the documents, still he is asking some more documents. Then till those documents are supplied, the audit will not set to be commenced. At the same time, if they have already initiated the audit, then whichever is earlier. So in most of the case, they will ask for the document. They will keep on asking for the document, and that will not lead to the commencement of the audit. Once they are satisfied that yes, all these documents are there, then it will lead to commencement of audit. This is something which is absurd, but this is the provision of the law.
Okay. Next question we have.
Ishwar, एक minute.
Yes, sir. Yes, sir.
Good morning, sir. Yesterday there was a judgment of Supreme Court in the case of Ocean Freight,
Yes.
and most of the audit and investigations, wherever imports are involved, department is of the view that GST will be payable under RCM.
Hmm.
So can you just highlight after Supreme Court judgment, what will be the scenario?
You are asking about ocean freight, or you are asking about the common aspect?
No, Ocean Freight. Ocean Freight.
Ocean freight, see, now they cannot ask. Even in my case, I was also part of that in yesterday's judgment. We have argued some matters. But please appreciate that ocean freight is now settled. The law is very settled now that ocean freight, any import, ocean freight applicable, the tax will not be payable. The GST will not be payable. They can ask for the normal tax, but they cannot ask for the tax on ocean freight. Import of goods, the tax is payable, but ocean freight, there is no tax. There is no GST.
Okay. So, should I go to the next question, sir?
Yes, yes, please.
Yeah. So, Thakkar sir have one question. Whether we can ask for copy of authorization in search case. In one of my cases, proper officer leading search just took a sign of assessee being searched and refused to provide the copy of authorization.
No, sir. The copy of authorization is the property that can be. It is merely you have a right to see that. They will provide a. They will not provide a copy of it. They will simply show the arrest warrant or search warrant or the arrest warrant. They will get your signature that yes, we have seen it, and then they will put that in the file, because that is one of the very important documents of authorization, because that is an authorization to him, that is not to be supplied to you. But yes, if you want a copy of that, and if you want to understand under which section it was initiated, you can very well file an RTI and get a copy of it, but the office is not bound to supply the copy to you.
Okay, next question we have whether we should respond to notice if it is not issued as per law.
To my understanding, yes. As a compliant tax person, the answer is yes, because what let's say there is let's say a very simple example. A notice is issued to us without a DIN. So that becomes a infructuous notice, a notice which is not existent in the eyes of law. But still we can reply back that I have received such and such notices, but there is no DIN. So therefore I'm not providing any details to you. So whether it is a notice which is properly issued by you, if yes, then it has to bear a DIN number. which is as per the provisions of circular number so and so, notification number so and so. That certainly needs to be responded back to show the bona fide. So my understanding would be, even if the notice is not as per the law, or even if the notice is bad, we must respond back to those notices.
Okay. Next question we have is, my purchase is not appearing in 2A or 2B. Can I get ITC if I have valid invoices?
As per me, yes. If you have the appetite to litigate this, if yes, then certainly the credit should be taken, because credit cannot be made dependent on 2A or 2B reflection. My supplier will not determine whether I should take the credit or I should become eligible for credits or not. But whatever I am saying is applicable till 31st December 2020. From 1st January 2021, after the implementation of 16.2 clause AA, it is from 21 or 22, I'm not sure, but from the implementation of that date, you need to be very sure that your supplier must have shown that. So yes, the answer is the credit should be taken and you will be getting the credit. Merely non-reflection by the supplier cannot restrict your credits. This is my answer. But 16.2 AA needs to be kept in mind.
Okay. Next question we have related to GSTR1. The person who was filing the monthly GSTR1 wrongly, as under GSTR1 reported excess amount of turnover and GSTR3B with proper amount of turnover is reported. The difference is of 10 CR and turnover is reconciled as per GSTR9 9C. So what will be the consequences?
See, GSTR1 is your acceptance of your outward supplies. Now you have accepted a supply to an extent of 10 crores excess. Department officer is right in asking the tax liability, and at the same time you are also right, because that is not a turnover, that is merely an error which has been committed, which has already been rectified in 99C. My suggestion would be, you stick to your 99C and try to point out that this is the way in which you have reconciled it, and therefore there is no liability, although there was an error, but there is no liability. If they do not understand, and you are not able to, because this becomes a matter of revision of GSTR1, maybe because of the time limits which has expired, because there is a time limit under section 37 subsection 3 proviso, which says September, till September you can take that credit. I can understand that once the time limit is expired, you cannot amend your GSTR1. So there is a judgment of Sundai Kem of Madras High Court, and very soon we'll have a judgment of Bombay High Court also. I'm arguing one of the matters of amendment of GSTR1. So you can rely on that judgment and you can ask the officer to let you amend the GSTR1 itself. So this is how you can proceed. And if he is not agreeing, then in that case, the only remedy would be, because the amount is substantial, the only remedy would be to file a writ petition before the Honorable Bombay High Court and get the order in your favor, wherein the court will say that yes, GSTR1 can be revised.
Okay, next question we have is, RCM is not payable on charges paid to security man who is not hired through any agency. This point is not agreed by officer. Being small amount appeal is not also desirable. What is the probable solution?
See, everything depends on the facts and circumstances of the case. Now, since you yourself are mentioning that the amount is very small, I would recommend to pay this amount, take the credit. Pay the amount, take the credit. Nothing beyond that. Because if you are able to, if it's a small amount, pay, take the credit. And the only thing would be the interest that will become a burden, but that will settle the issue. Otherwise, if you go for litigation, then litigation is cost is going to be higher. Don't go for that.
Okay. Next question we have a query related to interest on ITC availed but not utilized. I have availed wrong ITC of 1 CR in Feb 18. Till date, I have sufficient credit balance covering 1 CR, but on two occasions, May 18 and June 19, my ITC ledger balance reduced below 1 CR. For example, 70 lakh. How interest on ITC wrongly availed is to be calculated?
So case law is there. there is one case law of commercial steel engineering on the basis of which they have amended the law also, 50 subsection 3. But since you are saying that you have availed a wrong credit of 1 crore rupees, and at times it has happened that the credit has been dropped down, the balance of the electronic credit ledger has come down to 70 lakhs. Yes, for that period, the 30 lakhs is deemed to be utilized. So therefore, for that interregnum period, you will have to make the payment of interest.
Next, we have interesting question. So, what is your say on CGST department Gurgaon arrested two CAs? The culprit is and now CA is another question. So, any worrisome?
This is a time wherein we all are required to get united, like advocates. And this time we should not let it go. I have already given my replies on the social medias that these officers should be punished and suspended. We should file a complaint against them. All the officers, we should file a complaint and make sure that they are suspended. It should also be a criminal complaint so that they can be arrested. And at the same time, those two chartered accountants must also file a defamation suit against the department, because unnecessarily they have dragged their name and they have tried to defame it. So I am very strong in this, and even I have written to that extent that if any support from my end is required, I'll be giving that support. I'll be fighting those matters absolutely pro bono, absolutely free of cost for them. So my say would be, yes, it is worrisome for the profession at large. So therefore, we need to unite and take strong action against those officers so that it becomes a precedence. And in future, any officer who is trying to allege a chartered accountant, think at least 10 times that this community is a very strong community, and any action taken against any chartered accountant, the entire community can take us on task. So that is an example to be shown now, and this is the right time of showing it. This is only what I can say.
Okay. Whether notice under section 73 and 74 can be issued without initiating proceeding under section 61.
Yes, it can certainly be issued, because 73 or 74 are isolated or are independent sections, and those says whenever there is a short payment, non-payment, erroneous refund, or wrongful availment or utilization of input tax credit, a show cause notice can be issued. Section 61 deals with the scrutiny of returns. That is an independent exercise. Scrutiny of returns, if leading to some non-payments or short payment, then section 73 notice or 74 notice is issued. But even without scrutiny of returns also, directly the notice can be issued after certain investigations, let's say departmental audit. There is no requirement of 61. Let's say search, there is no requirement of 61. Even after summons, if they are investigating by way of a summon and they are satisfied that these credits are wrongly availed, they can directly issue section 73 or 74 notice.
Rohan sir, I have one question. Officer is asking to provide tally data on mail. Is it mandatory to give tally data, or we can ask to check data offline on computer at the time of premises visit?
It is not mandatory. It is not mandatory. But if you are relying on that data, there are two ways of keeping and maintaining accounts. One is digital, and the other one is not digital but physical. So if it is a digital, if you are relying on the digital records or digital statements, then you can very well provide it. What you can do is you can convert those tally data into the PDF files and share it with them. Even if he's asking that tally data, I find no difficulty into sharing it. But yes, the question is pertaining to mandatory requirement. The answer is no. It is not mandatory for you to supply the tally data. You can very well request him that whatever data you want to see, I can provide that in PDF format. If you want to see in the computer or in the software, you can visit our premises and you can have a look on that. But it cannot be exported out of my office because of these reasons, which out of those reasons, one can be the competitiveness also. That there are competitions also, and I don't want this data to be leaked.
Okay. Can we avail RCM, ITC on RCM paid right now? So,
Yes.
yeah.
As per my understanding, even for 17, 18, 18, 19, even you are paying RCM today, you can avail the credit of that. There is no embargo,
Okay.
there is no restriction.
With reference to someone, can different district DGGI officer issue someone with reference to particular issue, say reversal of common input, and ask the person to come on someone and ask for documents?
Yes, DGGI has a broad power. DGGI is the intelligence agency having jurisdiction across the country. So those jurisdictional issues will not be applicable in case of DGGI. DGGI can sitting at Delhi can issue a summon to Pune, and that officer, that person can be called at Pune, called at Delhi. That can be done by DGGI.
So, your views on ITC eligibility for GST 3B filed after time under section 16(4).
16.4 is under challenge before various high courts. Rather, unfortunately, 16.4, 16.2c, both these matters were heard by the Honorable Justice J.B. Patiwala, who is now elevated to the Honorable Supreme Court. We have argued it extensively, and it was only the other side, that is the government side, who was supposed to argue, but unfortunately, those arguments cannot be completed. And now, since he is elevated, it will be argued again. But my views are very clear that merely non-filing of 3B cannot restrict my ITC. I can very well show that it does not, the law never provides for filing of ITC, filing of 3B for availing the credit. It merely says that the credit needs to be availed. It can be availed through books of accounts also. So even if we are availing the credit in the books of accounts and we are able to prove that, then in that case 16.4 will not be a restriction. This is my understanding. Although it is challenged by me in Bombay High Court, Allahabad High Court, Calcutta High Court, obviously my own Gujarat High Court and Delhi High Court. It is under challenge, and very soon we can find some. Otherwise, if Honorable Justice Pardiwala would be there in Gujarat High Court after vacations, I was sure that until July we would have got some good order. But now, since he has been elevated, it will be argued again. So it may take 5 to 6 months more to get the order.
Okay. So on the same line, we have one more question. What's your view on legal standing of section 16(2) AA?
That again is challenged by us in High Court, because we cannot be subjected to action of someone else. I can have a control on my actions. I can be advised to control my actions and keep a check on that. But I cannot keep a check on my supplier's action. So therefore, 16(2) AA seems to be an arbitrary provision. It needs to be read down in a particular way. It cannot be struck down, but it needs to be read down in a particular way that in case of bona fide purchases, even if the suppliers has not shown, the credit should be allowed. Let's see what will happen. But this is how we are arguing it.
Okay. If the jurisdictional office, that is jurisdiction marked in red on GST portal for my GST is under central jurisdiction, does the state GST officer have power to conduct investigation?
Yes. Investigation can be, there is a term called cross empowerment. Cross empowerment has been given in this act only in case of search and seizure or inspection. In all other situations, the cross empowerment is not there. So therefore, for department audit, your jurisdictional officer has to come. That means if you are under CGST, CGST only can do department audit. But search, yes, the state can do.
Okay. Sir, someone has a question from you, another seminar, that in one seminar, I heard that you told that amount given in ASMT 10 is different from amount in show cause notice. Then is this the void ab initio?
See, there are two ways of looking at it. When I say ASMT 10, ASMT 10 is something which is pertaining to my returns, the scrutiny of returns, and the reply I have to submit. After the submission of reply, they will issue a show cause notice to me. Now, what I have supplied in my reply, whether they have taken connotation of that or recognition of that or not, if they have taken cognizance of that and then they have issued a show cause notice to me, wherein the amount is different, then certainly the notice is bad in law. But if I have submitted a reply and then they've issued a show cause notice wherein the amount is as per my submissions, then it will not be a notice which is bad enough. Because if a different amount is shown, please appreciate, if a different amount is shown, it clearly resembles that the officer has not gone through my reply, and without application of mind and taking into cognizance of my reply, he has issued a show cause notice which is absolutely bad in law.
Sir, one issue with respect to the statement, why in investigation, department usually don't share the statement recorded.
Correct.
So how to get that statement? Point number one. And
RTI.
point number two is they never issue show cause notice, sir. They just play with the SSC.
See, they have a time limit under section 73 and 74, 3 years and 5 years, 2.5 years and 4.5 years. So generally they are reluctant, and they generally keep on investigating and avoid issuance of show cause notice, because the law also says, and it's a settled principle, once they issue a show cause notice, and if they are getting some new facts and figures which is increasing the amount of allegation, then they will not be in a position to claim that or ask for that. So therefore they are avoiding the issuance of show cause notice to the extent possible, and at the very last moment they are issuing the show cause notices. And so far as the statements are concerned, the statements can be taken by 100 persons. They are not bound to provide a copy of these statements, but they are bound to provide the copy of the statement which they are relying upon. I'm repeating, they can take a statement of 100 persons against you, but out of those 100 statements, they might be relying only on 5 statements. So now you should not be concerned about what those 95 persons have said. So ignore it. So therefore, they are not providing all these statement copies during the investigation, because they themselves are not sure on which statement they are going to rely upon and on which statement they are not going to rely upon. So once they issue a show cause notice, they mention in the annexer that these are the statements on which they are relying upon in framing your case, and then they provide the copy of the statements. So it is not that they are not providing the statement copies. They provide the statement copies with the show cause notice and not during the course of investigation, because they are not aware of the situation or the fact whether they are going to rely on that statement or not. So therefore, if you want during that period also, you will have to file an RTI and get these statements. Otherwise, after the show cause notice or once they issue a show cause notice, they will certainly provide you the statement copies on which they are relied upon, and then you can ask for a cross examination of them.
Thank you, sir.
Yeah. So next question we have, can we use 100% ITC as 80% RCM cell and 20% is non-RCM cell against 20 non-RCM cell business is security services?
As per me, yes. What is the harm in that?
Sir, section 17(3), the definition of exempted supply includes the supply under RCM. So 80% turnover will be considered for calculation under rule 42-43. This 80% exempt will be treated as exempt supply, and 20% only eligible for credit.
Just a moment. Your query is that 80% is the RCM cell, correct?
Right. Yes.
What is RCM cell? RCM cell is on which you are not paying the tax. The recipient is paying the tax, correct?
Right.
20% is the cell on which you are paying the tax.
Right.
Now, don't forget about section 73 or whatsoever. I've now understood the question. Please appreciate, the ITC is available only in the cases where the output supply is taxable, correct? Am I correct or not?
Right. Right.
So in your case, the tax is being paid by your recipient. You are not paying tax on it. Since you are not paying tax on it, it will be equated with the exempted supplies. So you are absolutely correct. The reversal will apply there, and 80% of the turnover which is covered into the RCM. Let me take my example. I'm an advocate. In my advocacy, the entire supply which is being made by me, the tax is being paid by my recipients. So therefore, I cannot claim ITC even if I am registered. So it's absolutely clear 80% will not be eligible for ITC, and rest of the 20% certainly it will be eligible for ITC. I'm sorry, I could not understand the question first.
So we have next question. OYO search conducted in Delhi. Related hotel channel parties got notice for 1718 and 1920. One notice for loss from booking and second notice from room booking. So requiring all details from channel partners. What to do?
I think the question needs to be elaborated further. I'm not able to get the question, but what I can understand in this is that there was a search to the OYO, which was in Delhi, and the notices were issued. Now, I am unable to understand what is loss of booking. And yes, room booking, I can understand that they might have not paid the taxes or whatsoever. But what I couldn't say with this background would be that you supply the details. What is the harm in supplying those details? Because that is already recorded. You cannot change the records. So please supply the details and see what they are further doing it, from those details. If you feel that they are not, or they are going into a wrong direction, then you can point out. But as per my understanding, don't be non-responsive. Whatever they are asking for, try to supply all those details. And if you can elaborate your question further, then I will be happy to answer it further.
Okay. Notice under section 65 for conducting audit mentioned for or visit at registered personal place whether visit is good in law.
Yes, absolutely. It is good in law. It is permitted in the law, and it is mentioned in section 65 also, read with section 61. So you can very well take cognizance, and the audit can be conducted at his place also, that is the department, or at your place also. It is absolutely good in law.
Sir, what is the difference between by authority wise with the auditing of a officer and the investigating officer? Because in some audit cases, the officer is behaving like an investigator.
That is something which is pertaining to ego, because they generally develop a habit of considering anyone as a tax evader, everyone as a tax evader, rather, I would say. So while initiating that audit, now let me try to substantiate your answer. Let me try to substantiate my point. See, as an investigation person, or as a person who is conducting a search, he is empowered one extra power, only one extra power. Rest all the powers of the audit also is there, because audit, a person who is coming for an audit, he has access to your computers, your laptops. He can do audits, he can check the softwares, he can check your books of accounts, he can go and verify your stock records, everything you can do. Only one additional power which a person who is conducting search has is he can break a lock of your almiras, your godowns, which you are not opening for him, which cannot be done by an auditor. That is the only difference. Otherwise, rest everything is same. Auditor also has an authorization. The search person also an authorization has an authorization. They also can go to your premises, visit, verify the stock, verify the records. Each and everything can be done simultaneously. Only thing is that they cannot break open your almiras, your lockers. That cannot be done. They cannot seize your goods. They cannot seize your books or account. That is the only difference which is not, or which is there in case of auditor vis-a-vis the investigator. But the only thing is it's a one person. He might have worked as an investigator for last 10 years, and now he is into the audit, so his attitude will remain same. So we'll have to handle that politely and depending on the circumstances of the case.
Sir,
Same line.
Ishwar, just
Yeah.
a minute.
Yes, yes.
Yeah, sir, in one of the case during the conduct of audit, the auditor had, my client is providing services to SEZ. So the auditor was claiming an endorsement certificate from SEZ officials. So is it mandatory? Because without that, then he was saying that he's going to calculate the GST and the same has to be paid then.
Yes. See, there are provisions which say that if you are providing authorized services to the SEZ, then the endorsement has to be there. But trust me, even if it is not there, you have a very good case to fight. wherein the GST applicability will not be there. So in either of these circumstances, if it is possible to submit, please submit it. See, if something is available and we are aware that the department is asking, which is not the requirement, but if it is available, submit it. There is no harm which is going to be caused. But if it is not available, then he cannot take away our statutory right, and he cannot say now you will become liable for GST.
Okay. We have last question, sir. What is difference between notice under section 65 for audit and GST ASMT 10 notice?
See, GST ASMT 10 notice is a simple notice wherein they are scrutinizing your return. During the scrutiny of return, they come to know that there is a discrepancy which is there, and they point out that discrepancy in ASMT 10, and they ask you to explain that why this discrepancy, and why, if this discrepancy is not explained by you, then why they should not add that into a tax liability. This is one. And section 65 is a notice for departmental audit. Department audit is a broad term. You read the definition of audit also under the law, section 2, clause 13. It's a broad term wherein the broad powers are given to the authority. He can visit your place, he can conduct the audit, he can check your all documents, all records, everything, all invoices, the method in which you are maintaining the records, the method in which you are availing the credits, everything can be checked, and then the audit can be concluded. So it has a wide difference. One is scrutiny of returns under section 61, and the other one is complete audit for the purpose of examination and verification of your books of accounts, records, your ITC availments and utilizations, your tax payments and everything. So there is a difference.
I think we are done with questions, that too in time. So if anyone still have any question, they can put it on chat bar or question and answer session. Till that time, we have with us Ajinkya Randive sir and Rajesh Agarwal sir, who is vice chairman of Pune ICI. So I would like to ask both of them to give a vote of thanks.
Good morning, sir.
Good morning.
Sir, on behalf of Pune branch and all the participants, I extend my heartily vote of thanks for giving your immediate acceptance. 1 minute you said yes. This is really appreciated, sir. You are always shared. You are ready to share your knowledge, which we have enjoyed in COVID period also. Continuous series, monthly series even you have hosted. Thanks a lot, sir, for coming and enlightening us on the topic given. Thanks a lot.
Thank you, sir. Thank you.
I also extend my thanks to today's MOC, Ishwar, and all my participants. Thank you, friends.
Sir, just one thing to add. I am a regular receiver of WhatsApp updates, and it's really knowledge boosting. And today hearing you in person was really a great experience. So I also once again thank you for sharing your knowledge, and thank you again. Ishwar, we can then.
Yes, sir. Thank you very much, sir. And the most important, thank you, Pune ICI, for conducting such good sessions. And we'll have tomorrow session on ASMT 10 and input tax credit implications. So everyone, we can continue this session tomorrow with a speaker. And I would like to extend my special thanks to Avinash sir, because he have enlightened us with so many aspects, and where we have to submit documents, or where we have to fight, where we have to go in Supreme Court with read pastry. Everything he has briefly mentioned with his expertise and experience. So thank you, sir, for sharing your knowledge and enlightening us. Thank you, participants. We had, sir, more than 100 participants. So it was, because of great speaker, participants have so much amount have joined. Thank you, sir. Thank you, Pune ICI, for conducting such seminars. Thank you.